how the futures looking this morning?
Well, flat is the watchword for the day, both in futures and in Europe. We had weekly jobless claims that fell slightly, but the prior week was revised up, so continued sort of not a great picture in the jobs market.
Tell me a little bit about Europe. Of course, we had a Spanish bond auction today.
Yeah,
that didn't go. I mean, they sold their bonds, but it was pretty expensive to do so.
That's right. So it was the first auction since they announced that they might seek a bailout. They were able to get off more bonds than they expected, but they paid a heavy premium. However,
yeah, I think just to catch people up, they paid, oh man, on the 5-year bonds that they sold, I guess they paid 6.07%. And what does that mean? Well, in May they were paying 5%. So just in a month.
Absolutely. So it's a significant rise, but if you look at the 10-year Spanish bond, yields are coming down. They're down for the third day in a row. The same is true in Italy.
Really?
So,
okay.
So I mean, we have kind of a mixed picture. While there's not great news in Spain, the markets are considerably calmer across Europe than they were late last week, early this week.
Because I guess ultimately what people are worried about is if you get economic contraction in Spain coupled with rising borrowing costs, Spain may have to turn to others in the EU, Germany especially, for a sovereign bailout of some kind.
That's exactly right. So all eyes, continue to be on Europe, but after Greece was able to cobble together a government, there's a sense that the Eurozone isn't immediately going to rupture, and so it's sort of going to be this drawn-out process, and continue to watch the economic signposts. Speaking of economic contraction in China weighing on Asian markets, we had a manufacturing number there that was a little bit grimmer than expected, which seemed to be weighing on futures earlier in the session, but not so much anymore.
How about the Fed? So people were not... I mean, they were hoping we'd get the printing press back yesterday, right?
That's absolutely right. And I mean, and we had markets rally for about 3 weeks, sort of on this vague hope that we're going to get something a little bit more.
QE3.
Maybe QE3, another bond buying program that we had. Was I think
extending Operation Twist was
Operation Twist, right? So I mean, but I think it met expectations, and for some, and so it was sort of a flat reaction. I think it surprised some that the reaction was so flat, but we've had so much of a market rally headed into yesterday's announcements that it was so muted. We got nothing, and so now it's clear.
Can stocks even hold levels without the Fed anymore? I mean, we got our buyer of last resort in Washington. It's kind of, I don't know. I don't have a lot of faith in American capitalism.
Well, there's a
the only thing that props up our markets.
There's a lot of concern. I mean, we talked to traders that equate the liquidity that the Fed's been injecting for years to heroin. I mean, it's. I think there's a lot of worries that the markets won't be able to hold up without not only U.S. central bank action, but action across Europe and China. We had China central bank action earlier this month, so we definitely have one of the main supports of the markets have absolutely been central bank action, and so we'll see what goes on when we head into earnings season, next month, whether fundamentals can prop up stocks once again.